Has the recent run in better than expected inflation data forced 10-year Treasury yields to their current 3-month low? On April 25th, the U.S. 10-year Treasury yields traded at a 5-month high of 4.7%. The prevailing narrative was that inflation was far more persistent than many had predicted, and that perhaps the Federal Reserve would settle for a level higher than their publicly stated 2% target. Now, since that time, yields have collapsed to a current level near 4.21%. There appears to be a couple things that have driven the change. First, worries over inflation have diminished after consecutive beats in PCE, CPI, and PPI. Second, the surprising parliamentary elections in Europe have some worried over social unrest, and that may have fueled a flight to quality bid in U.S. Treasuries. Last, the spread between investment-grade credit and U.S. Treasuries has widened out to a 3-month high, perhaps signaling broader economic trouble. Now, credit spreads on investment-grade and high-yield corporate bonds have long been a leading indicator of potential economic stress. Now, the CME Group has recently launched credit futures that allow traders an additional tool to hedge against that risk in both. Now, on June 27th, we'll see the latest U.S. GDP data. This series has proved to be a significant surprise last month when it came in at 1.3% below expectations. Now, we also have PCE on June 28th, which is often dubbed the Fed's preferred measure of inflation. So if a trader believes that yields could continue lower from here, they could sell the July 10-year Treasury yield futures contract at 4.23 and target a move to the psychological level of 4.00. A stop for this trade could be placed above at 4.40. Now, this trade can make $230 if the target is reached and risks $170 if you're stopped out at your level. Now, if a trader believes that yields could rise from here, they could buy that July 10-year Treasury yield futures contract at 4.23 and target a move back to the May highs of 4.62. Now, a stop for this trade could be placed below at 3.95. This trade can make $390 if the target is reached and risks $280 if you're stopped out at your level.